An okay sort of session yesterday. I mean, I would say a little disappointing considering we were just a whisker away really from that all-time high and then fell back from there towards the latter part, or the last lap of yesterday's trading session is when you actually saw that big turnaround, and finally the markets fell absolutely flat, giving up all of their morning gains. And to think of it, we were just a whisker away from that all-time high. We started well above that 25,000 mark. So closed in exactly where we started off. But it's a little lackluster across the globe. It's not just us. Dow has been seeing the second straight record close. Having said that, US futures are a little bit easy this morning. You're not really seeing as much of a gusto. The handover, of course, was okay, very mild, flattish to marginally positive across for all three key indexes. It's actually Nvidia earnings. They were the ones which really were on everyone's radar. But interesting things which are happening outside of the equity markets. You've got US home prices which have risen more than expected. At the same time, crude prices have slipped a little bit. Copper prices were a solid rebound. They're now at a 6-week high. And cryptocurrencies, they're tumbling. Bitcoin is below $60,000. So a bit of an adjustment and a bit of a shake-off happening across asset classes.
Yeah, I would say we are in for more of the same, Aisha, simply because if you frankly look at the Nifty, and the global setup is very easy to understand, that the Fed reaction or the Jackson Hole reaction lasted, let's say, for a couple of hours, and that's about it. And we've not seen anything meaningful after that. And markets now pretty much know which way directionally things are moving. So there is, I won't use the word uneasy calm, but there is definitely a calm in the market, so to speak. Nobody is expecting any kind of a storm also in the nearby. I guess the trade in the short term is very simple, which is that the dollar index is trading with a downward bias. Emerging markets have started trading with a positive bias. Global markets are not far away from its all-time high, and global commodities got crushed. Look at Nifty. Last 10 days, Nifty has simply hugged on to a flat line. We may be up and down here or there by few bips, but in general, last 10-day move for the Nifty this month, and we are talking about one full month. And in this entire month, where we were bombarded with global news, we were bombarded with a lot of macro data, there were a lot of pending numbers. What has the Nifty done? It has simply hugged on to a flat line. So that's the point I just want to bring out, that irrespective of what is happening in terms of the news or the views or the flows, markets are simply consolidating, and they're consolidating beautifully. And if you just zoom in this graph with a 1-week change, the 1-week change is even flatter, which is that in last 7 days, there you see. What have we seen? Like 2% change in 7 days. That just tells you the kind of market we are.
So, Nikunj, just to understand what you're implying by this, yes, of course, there has been consolidation and we've been holding flat 25,000. But is that being viewed at positively in light of everything that's been thrown our way, or is that a bit of a disappointment?
No, Avan, more bad news has been thrown at us, whether it is from...
Yeah, exactly. But despite that, it's just been consolidation.
You're holding on. So why are you, with this kind of a set of cues and news, the market should have come down.
Yeah.
Earnings have not been great, upgrades have not come in. So why are markets holding on, whether it is DIF low, HNIF low, money coming from insurance, money coming from P investors? The bottom line here is that markets are holding on, they're holding on beautifully. Second, the market breadth is something which is really masking the pain which is happening in a lot of sectors. Again, I go back to that same point. Defense, railways, shipyard companies, these are the performing stocks, and these are the stocks which are just doing nothing right now. Second point is the large sector like banks, which is giving you a lot of start and stop kind of a promise. So this market, if you look from the eye of Nifty, looks like it is consolidating. You look at the market from the eyes of few sectors, well, it's a very differentiated approach. Pharma is outperforming, auto is consolidating, the reversal has started in some of the PSU names, and for IT, I think it is still like a no man's land in terms of where it wants to go.
Okay, that's that on the Indian markets and the kind of texture that one has been seeing. But the big one, of course, has been last evening's news. The fact that NSE is taking its fresh IPO plan to SEBI. And remember, this is the third time in about 8 years' time that this is actually happening. the largest stock exchange of the country, and they're finally making a fresh attempt to list on the markets following an 8-year delay because of a lot of regulatory hurdles which actually came about. The board basically has now authorized the management to seek SEBI's no objection certificate or NOC, paving the way for the IPO. And this is, Nikunj, going to potentially make NSE the third listed stock exchange in India if they get all approvals this time. That's after MCX and BSE.
See, NSE listing would be like a grand event. It
Absolutely.
really could be the listing of the year or listing of the decade, so to speak. We're talking about NSE both in terms of size, in terms of reach, in terms of cash flow, and also in terms of the underlying valuation, what the current FY24 earnings for NSE they stand at. We'll talk about the importance of NSE listing, but let me just connect the dots here. I'll make an attempt to explain the news here. In a board meeting yesterday, NSE has decided to send a NOC, which is no objection certificate, to the regulator. The regulator in the past had not approved the issue of NSE for corporate governance, for technology lapses, a lot of other factors. The board of NSE feels that the concerns which were raised by the regulator, those concerns have been addressed, and they are confident that once those concerns are raised, the deck should be cleared for the IPO. The final decision would be with SEBI. SEBI ultimately has to take a call on whether they feel that NSE is fit to go public. We don't know what they would decide. But if a board of NSE is taking a decision that they feel that they are ready to go public, and those concerns of course have been addressed, otherwise why would they like to go back to the regulator again? Because the regulator will push it back again. So that is where the story stands. Having said that, let's discuss the importance of NSE. I mean, we are looking at India's largest stock exchange, marquee market share, cash flow, trading at a discount to what MCX and BSE are. So you put all those things together, well, this really could be a big one to watch. In the COVID low, and NSE is one of those stocks which trades in the non-listed market. There is a very large non-listed market, and I think NSE volumes are actually higher than a lot of Nifty 50 stocks put together. That's what I understand. It's gone from COVID low of 1,000 rupees to about 5,500 rupees. And even at that valuation also, it is at the half the P of MCX and BSE. So imagine if this goes public, what kind of magic it could create.
Oh, yeah.
If you like this video, then like, share and subscribe to ET Now.